following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 16th day of August. My pleasure to be here halfway through the month. The monthly candle is looking great, but of course it's halfway through the month. Can't even talk about that. We have to wait for the candle to complete. And looking at the E-minis, they're down 6.25. Before I forget, let me just show you the 10-minute chart. Just been in a concerted down move, making lower lows and lower highs. Right here is where some kind of a base should form from the 2177 round number low. The way I'm looking at it, if you break under 2177, that's going to be real tough for the rest of the day for the market to come back. But if there's a bounce from here, from 2180, and you're able to break above peak A, which is right there, the last peak A, at 1010, which is at 2182.50, a break above that would suggest the scenario that I'm looking at, and I'll explain why I'm looking at it, and I'll go to the E-mini daily. The E-mini daily is at a potential peak G/C at this particular time. The MACD, the moving average convergence to divergence, is negative. It's deflected low. But the stochastic is still at 87%. And the 9-period moving average, which was support this morning at the 2177 level. Well, 2176.50 is about the 9-period exponential moving average. Unless we get bad news on a high volatility index, a volatility index that's moving, now it's at 12.40, but going to the 12.60s or higher, my contention right now is that there's just enough residual strength to possibly make a nominal new high in the E-mini, not today, but tomorrow. If it's not today, it'll be tomorrow. And it could be tomorrow morning before the Fed, or it might be after the Fed announcement, but 2190.75, so you want 2191 tomorrow. If there's no new high today, that's the number to be looking at tomorrow. And that'll set in place a leg D in the S&P. Now let's go through the numbers. INDU, the Dow is down 43 at 18,592. It's made a peak E. It could still go to an F, but it looks to me, based on the technicals, that unless there's a really 150-point move between the close today. No, it's not. That's nebulous because we don't know where we're going to close. Let's just give you a number. Unless the Dow is able to get to the 18,700 level this week and close above 18,700, that would be really important. That would be almost like a breakout to the upside. Certainly, the weekly will extend higher in leg E, and that's going to be positive. We've made a potential peak F right now in the 120-minute chart. So a lot really depends on what goes on between now and tomorrow afternoon. I'll give you the parameters. Dow down 43. If the Dow is above 18,000, is testing 18,690s tomorrow afternoon and is able to get into the 18,700s, you could have recycled and we could rally into next week. But if there is a pullback and the Dow closes below 18,500, I'm going to be safe. I'm going to say 18,470, a close that is. That's going to suggest that at least in the short term, we could be seeing a pullback of time, not yet points, not until the Dow is able, and this is very important, not unless the Dow is able to overcome any bad news. In other words, we haven't had any real bad news at this point, and that's what you need. You need bad news plus a high volatility index to sustain a down move. So even though we are actually on the short side, having taken profits on the long side, I have to give a little flexibility here because I'm not hearing bad news enough to curtail to see the S&P down 12 to 15 and holding, and the Dow down 135 and holding. So that to me is important. I have to have those two ingredients. Let's go to the S&P, SPX.X. At this point, the S&P is only down 7 at 2183. Now, there could be a peak F. If it goes to a higher high, it's going to be, it's going to be a little difficult to make a peak G. Usually you'd recycle and you'd go to a new D. So I'm looking at this and I'm saying I see limited upside, but certainly a break above the high. Yesterday's high was 21.93.81. Let me just change that. 93.81, 93.81, 93.80.81. And I would suggest to you that a move into the 2200s is really needed to be able to sustain a move from here to further upside gains. Okay, let's go to the QQQ series. The QQQ is at 117.32, having made a potential peak D. There's no new high today. It too is starting to see technicals very strong, but actually starting to pull back. So that says it's just a bit of a warning saying this is the point where you could start to see a deeper decline, but it hasn't happened yet. And the weekly chart in all three indices I've spoken of still extremely strong technically. If you go to the IWM is down 79 cents. They're going G/B. That's wave 7. You want to get to the 8th, which will be a recycle. So if you go to a new high tomorrow, that's you could. That's an A/C. That's very unusual. But I'm looking at the QQQs, and I suggest to you that if you look closely enough, you will see that although the technicals have declined, the way the price has held the 9-period moving average of 122.11 is going to make the 121.50 to 121.00 area really important. We take out that support in the next 3 days, that's going to be very negative. Gold, when I was looking at it last, it was up nicely. It's up 4 at 13.51, still stuck in this trading band. Look, there's that resistance area I've spoken about. How important it is to be able to recognize Chapman wave inside track repellent zone, little mini channel, and it got to the top of it. It couldn't break through, and it's pulled back sharply. That means we must look at the dollar. The dollar earlier was smashing through the left side low bar. It's still below it. So let's go through the rule of the lowercase h. In the dollar's case, that low of 95 round number on the 2nd of August, it took it out today. If it's able to close above 95, that's important, although this is a really deep leg C to the downside. But if it isn't, and it can't do it within 2 days, 2 sessions that is, that's going to be very negative and suggest that the resistance is now 95.69 and very tough to break. But if, perchance, the dollar actually rallies towards the 95.20 area today and then goes higher tomorrow, I would suggest to you that the dollar and gold are continuing in this trading band that they've been in for a while. I'm missing the TLT. The TLT right now holding nicely, also in a triangle formulation. This is like an asymmetric triangle. Make it real simple. It's a 138.42 down 34 cents. If the TLT, the Lehman T-bonds, breaks under 136.99 in the next 2 days, that's going to be very negative, and rates will go higher. And if it breaks to the upside above 141.10, that'll be positive. Just a trading band, that's all I'm looking at here. Now, one thing I'm missing now, of course, crude oil. Crude oil is at, it's up 23 cents. That's a nice extension from what we were looking at yesterday. And this is still leg B. So crude oil is still moving higher. That should help our market a little bit to the upside. And I don't know if whatever I've missed, I'll come back and I'll look at it. But I think I've covered what I wanted to cover, at least for now. I'll talk about my webinar tonight. Wow, is the timing perfect for that? Tonight's webinar on higher highs still to come. Whoa, I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and the Dow is down 26. S&P's down 5 3/4. Nice little bounce that we've got going on here. As I say, I don't see this right at the moment as topping action. No, I shouldn't say it as the type of action that you would get from something like a peak E or an F in any of the indices. This is more like you'd get at a D or an E where there's a recycle that maybe can go a tad higher. It doesn't have to go very much higher. So that's what I'm looking at. BIP was what I was asked about. Brookfield Infra Partners. I think this is a REIT. I'm not sure if I remember correctly. It's at peak C in the daily, and I would recommend that pulling back a little bit today, 24 cents, in the 47s. I'd be looking at it to make, if you're long, I'd look at it to add. If you aren't long, that's where I'd look at it as a new position, but there's a little bit difference. If you're in it from lower down, it means that you've got a much bigger comfort factor. So here I'd say that if you're in it, if you want to get in, it's at 49.80 up, down 24 cents. I would wait. I'd have patience. Let it go to a D and then take about 2 weeks or so to come down and then see how it tests the 48.20 to 47.20 area. Somewhere around the 47.75 is where I'd nibble on it. And then if it starts to rally, I'd add to it. But it looks very good. Monthly chart. I don't know. This looks like a brand new leg A, but let's do one thing at a time. Weekly is a little extended and it just might need a little bit of a consolidation. But so far, it's a stock that's performing well in this market environment, and that's what you want to be looking at. A couple of things I want to look at here. Sometimes things just get away. I saw that there was some mention a little earlier, ACAI, I think it was. I was busy working at the time, so I'm not sure what ACIA stock that just went flying. And there it is. I had done work on it right at the very beginning. In fact, it was on my list of stocks that I considered as an IPO. I didn't know anything about it. It was in the communications field, which I liked. And I thought, all right, let's see what's going on. And it's just screamed. Even in the last few days, it's gone from the 70 level to 100. Hit 109 yesterday, 109.36. So sometimes things just get away from you, but put it on your radar because you want to be looking at them again a little later on. And what I would be saying is some of my subscribers actually got this because I did all the homework, I liked it, etc. But we got in, we were unchanged, made a tiny little bit, and we lost a tiny little bit. But this is a stock that I loved. TWLO, I'm not really sure what they do. It doesn't matter. I loved it as an IPO. I love the chart formation. We were in it in the 42 area, 4260s. And look what happened. It just, it had a lousy day right there. It started to pull back. And I said, okay, it's at peak C. Do I want to get it for a D and then have it pull back? And then once again get stopped out I said, let's just step aside for a day. Ha ha ha. Thank goodness some subscribers still kept it. And it went from the 42s, whoosh, to 49 round number on the 11th. Boom! It went to 53.37. I'm practicing all those noises. I'll see my grandson in another couple of days. And 53.37. And then the next day, it was yesterday, it went to 66.40. And even today, it pulled back, but it's still, it's 64.16 was the high. I mean, when something happens like that, you just have to shake your head and say, wow. It happens. It just happens. Things get away from you. And it seems now I can see the two together. It's also in this is cloud communications, and the other one was communications. So they must have been recommended by someone big. And then over a 50% gain. I mean, come on. That's amazing. So what do? For the people who were in it, I say, take some profits. Keep your core. It's low enough to keep your core. Take some profits and let it just rest. And if it goes up higher, fine. But if it doesn't, you've got a huge gain. In a few days, how often do you get that kind of a gain? Even in options, it's difficult to get that kind of a gain. So that's how it sits right now. So let me do a couple of things here. So that's Twillo, TWLO. We had it, didn't have it when it made its massive rocket ship move. That's the way it goes. Now I'm going to do something else. I was asked about the SLX. I've had some subscribers. I've had the same thing happen in my my webinar from June, the very first week of June. I was discussing the steel stocks and other stocks, and they've had spectacular moves. Some we've got, some we don't. Not a problem. This is a fresh look at SLX, which is the Van Eck Vector Steel ETF. I'm going to suggest that this is something you keep on your radar. I think it's a little overbought right now. I also suspect that the market is getting ready to maybe do some rotational consolidation. That's the way it looks right at this particular point. So I want to keep my eye on this, and we don't have a position, but it's at 32.16. I would suggest that under 30, it becomes a lot more attractive. I have a question now about CTAS, which I always talk about because it's the big kahuna. Oh, my goodness. And another one that we talk about all the time. We've never owned it. Why? Because it's been hard to get into. And every time it looked like I want you to get into it, it looked like, oh, man, it's about to have a big pullback. Instead, it's skyrocketed. ABC. This is a brand new leg. C to the upside. Another one. Super rocket ship. It's in C. It's 115.12 must have come out with some news today because it's up 7%, up 7.69. This is Cintas Corporation Overalls Clothing Rentals trading at 115.08. So I've looked at it. I thought it made a short-term top just recently in July at 99.78. Oh, couldn't it be more wrong? This is A, this is B, this is in leg C in the daily as well. So this is acting, and this is telling me a lot about the economy. And you know, I've spoken about the economy. I've tried to be as critical as of any administration as I can. Critique, meaning to be able to praise and to look at the points that are not working. And I've suggested that this is a little bit weird. I've never seen an administration go 2 terms and barely ever talk about the stock market when it's been one of the best stock market performances historically. I just don't understand it, but that's what happens. And I've also said that I believe that there's a deeper underlying buildup of jobs that is coming on track because I didn't think that it was being measured correctly. For a long time, I've been saying this economy makes economists their standard measurement. I don't think it's going to work. I think we're looking at something else, and I still believe we're looking at something else. So I think that there is an improvement. You have to have an improvement when the overalls and clothing rentals from Cintas, CTAS, is just been working. It's looking very good. So I'm just saying, yeah, I was asked about it, and Cintas is amazing. I mean, we could have got this ages ago because it's like one of my pilot light economic indicators. And who knows, it just, it seems to tell the story. I mean, if you look at it historically, you'll see that it made its low. Let me go back. It made its low where? Right at the low of March, just like the general market in March of 2009. But it made its high in 2002. Why? Because it takes a long time for companies to get out of contracts. It gets a long time because why? It takes them so much time to actually build up that confidence to increase their product rentals or whatever. So to get out of it, they want to be absolutely sure. They don't want to go through the whole process again. And that's why it went to a higher high when the general market had already tanked. So I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 34, S&P's down 6.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and I was asked about X and SLX. I believe that I'll be spending some time on them tonight because they fit into a category that I want to be looking at. But in the meantime, I just think it needs to consolidate a little longer. And then there was let's see. Yes. So just have patience because the steels have had a fantastic move. Some of them have doubled or more. So they need to just consolidate. Now, I had another question about, where did it go? Hold on a second. Let me just find one of my many screens here. Oh, boy. Okay. Yeah, what about gold? Yeah, I'm going to be showing charts tonight of gold, and I suspect that gold, same thing. I've got a call. I got Mark in Fort Collins. Mark, I didn't see you. I'm sorry. How are you?
It's okay. I'm used to being ignored. Just kidding.
You married, Mark? Sorry.
Exactly. For a really long time.
Yes, your question.
So I picked up a position in GSV, Gold Standard Ventures. It hit looks like it hit a peak C, and I'm looking for a peak D on it. I wanted to get your take on that.
Can I just ask you a question? How did you find the stock?
I actually saw it break out and saw what leg it was in. So I bought the pullback after the big day. I just got it around 260. So I've got a tight stop on it. I'm looking for it to get back above 320 for a peak D, but I wanted to see what your thoughts are and if you have any kind of time frame.
Yeah, there's a big difficulty. I just want to say that for stocks like this, folks, this is not for the general public. This is a stock trading at $2.78, up 6 cents. If like Mark, you've been watching it or it's been on your list for whatever reason, and then suddenly you were able to actually buy it, and now you've got experience with it, that's really a completely different thing to suddenly hearing it mentioned on the program, and you say, oh my God, $2.70 I can buy, and you multiply some number in your head, and you say, I'm going to buy, thousands and thousands of this little guy. From 277, the way it's gone up is also the way it could go down, so you got to be real careful. But one of the things that is very important about a chart like this is that it has a function that looks not like a pink slip stock, not like a stock that is touted by folks who have an interest in seeing it go higher, and speculate that if enough people hear the name, they'll be buying it, and they can just go in and out. That's one of the ways that these specs work. This is different because even the pullback over the last 3 days has made higher lows so far, even though they're lower highs, and that's really important. It hasn't broken the very big spike and pullback to 255 that was from a few days ago. So this is a legitimate chart pattern. Now, that's two separate things completely, saying it's a legitimate chart pattern or a legitimate chart, a legitimate stock. The pattern says there's something there, and it's acting very well, and it looks like any other stock that has sudden abrupt moves. And one of the things about this abrupt move is that it didn't go as if it was touted and it spiked up to 320 where somebody said, at 320, sell my 50,000, whatever it is. This is very different. But one thing that I do want to mention is that the volume was 11,167,000 4 days ago, 5.5 million the day before, and this is a stock that was tootling around at 500 and 600 and 700,000 just in July. So the volume that you're looking at here has a character of some pushing. In other words, there's something going on, and I'm going to just have a look, if you don't mind, I'm just going to have a look quickly at news, see if there's any news on this thing. So here we go. Okay, and the news. Gold Explorers drill results make it a top. Take something. Take something. So that's, it must be a takeover. So it isn't a takeover yet, but it's someone saying that it's in the category of being taken over. And a little bit Toronto, Ontario. Let's see, back in late February of this year when the stock price was 1.17 at the time, we believe there could be a potential takeover battle brewing for GSV between Goldcorp, and Ocean Gold, both of which owned a significant stake in the company. Since then, Gold Standard Ventures has released drill results that could possibly be a game changer, potentially bringing an entirely new suitor as a top contender for this promising Nevada gold play. All right, so something's there. That's all I wanted to see, and that's good enough for me to say, yep, something's going on here that's at least legitimate, that says you've got something. Now, so do you still have a core position, or you've taken money off?
No. I have a position around 260, and I've got a tight stop on that. I don't think I want to let it go any lower than like 240. and that's under that big day, that big volume day, and I'm looking for it to maybe make a run back up to the 320 range and make a peak D.
So I like your thinking. I'm going to make just two suggestions that you need to toy over. One of them, and the other is just straightforward. The one that I'm looking at says, holding so well after such a big move is a very important factor in my work. In fact, the 120-minute chart has a rectangle and just says very simply, a close below 255 would be quite negative, and that would say to me, there could be even further moves to the downside. But holding like this, I like it. So here's my recommendation. One is, if you got it at 260, and you're going to put a stop of 260, still expecting that it's going to go D, to a leg D. I understand your thinking, because your thinking is it's still got to go to D. I'm prepared to sit back and watch it, even if it pulls back a little bit, not more than 8 or 9%. I don't want a 10% loss, but I'm prepared to give it a little bit of room, because if it moves up, it can go to 321 at least. 321 from 78 cents at 278 right now is a 10% gain. So wait a minute, we're talking about a potential 10% gain.
20.
But there's a what?
More than 10, right?
278 would be 22 cents.
We're going to
right?
22 from from 60 cent gain from 260 would be.
That's okay. That is different. That's 40. That's different. That's 60. That's 20 or over 20. Yeah. So I'm just saying to you, think about your risk to reward. Number one. Right. Number two is, you could say, hey, 277. I've got a nice percentage gain. If it goes to 283, 284 and breaks today's high, that's a really good sign. So the ways of working it out here, that at least you've locked in something, and if it does go down, you start a fresh position with no loss, but with a gain. So that's just something to toy with. The other thing is, in answer to your question, do I think it's going to go to a leg D? Everything about it says, I just want to look at the history of the daily. Yeah, everything about it says that this is an aberrational move, number one. But number two is, it does invariably go to a D. I'm just quickly glancing, A, B, C, D, every one of these gains has been to a D and then has pulled back sharply. So my answer is yes, I think it's going to, and I think we've got the right strategy there. The only thing I wanted to say is, maybe you want to take a little bit off, you can always put that little bit back. That's all.
That's good. Thank you.
Thank you for calling. I appreciate it. Mark in Denver. We were looking at GSV. I'll be right back. Dow's down 52.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and let me just do a couple of things here. Tonight, it will be the opportunity for you to join me. I'm doing a webinar. I'm doing a live webinar, 6 o'clock till 7:30 for my subscribers. You could go to the webinar for free, and you can get my newsletter for a month free if you sign up. It's the only way you're going to be able to hear it. And I do consider that the thoughts, some of the ideas are perhaps going to be presented in such a way that it opens up a whole new way of thinking of the next phase that we're in, what you need to be looking for, why you need to be looking for it. And I do expect that we've got to be ready for some kind of a sudden, quick, sharp pullback at any point over the next couple of months. At the same time, there's enough buying out there to be able to go to new highs. Now, one of the things that's very important is look at this chart. I'm going to be discussing commodities. This is a 1-to-1 that the commodity index is made. I just put it on the side to show it there. I usually grab these and show where it fits. It fits from there to there, and then from there to there. That's the traditional A to B equals C to D. And what's happening in commodities, that's very important. Why we're looking at it. I'm going to be looking at gold. Look at this gold chart. Remember the high was back in 1980. Some of you might remember that, when the Hunt brothers tried to corner the silver market. Well, this is a continuous contract, so the price is going to be different, but the ratio is exactly the same. 1690 was the high back in 1980. It plummets, gold plummets down to 471. February of 2001 was the low. It's interesting because I remember getting a buy signal on the XAU, the index, and was at about in the 44, 45 range. And then the continuous contract over the period of 11 years, goes to September of 2011, 1968. That's 300 points above where it was in January of 2000. January of 1980. And then it pulls back to 1,057. Well, that's an 80%. That's a sharp decline, right? So, no, I'm sorry, didn't that. That's from 1968. Oh, yeah, that is about 50% decline. And then what happens is, a little less, of course, 47 maybe percent. And then it bounces. What do we do after the bounce? That's what I'm going to be discussing. What do we do, and what are we looking at, and what would we buy, or what would we short? It's going to be really important. Here's another one. There's another chart will be right here, the dollar index. Look at this beautiful cup formation. Well, it's not a formal cup formation because I've taken it from an important left side high, but that's not the high. It's just a high on the way down. It's not the all-time high. So this cup is a fictional cup in a certain sense. It's really like a bowl formation going all the way from the 2003 midpoint at about 100, at about 99, let's say, pulls back, goes all the way down to the 70 level, and then rallies back up in the same amount of time. Well, actually a little bit shorter time because it got extended, and then goes to 100. But it goes to a B and then a quick C and then pulls back. What does that mean in the context of the big picture? What are we looking at in the dollar? Wait a minute. What about the financial sector, the XLP, the XLF? I didn't mean XLP, XLF, the S&P Select Financials. Look, it has also made some kind of a cup formation like the dollar installed. It's making what's like a rectangle formation. Is it going to continue trading there? We're going to be discussing that and discuss some of the charts. The interest rates, Japanization of our bond yields, from 1981 was the high in September, up in the 15 area, or 15s, right? 150, so that's 15%. And then it comes down, but it starts the down channel. This is incredible. 31-year down, 30-year down channel. Who's ever seen a down channel that lasts that long? So, of course, it's an up channel in bonds. This is the yield. This is the 30-year yield. What's going to happen around you? Are we starting to make an H that goes to an M, or is it an H that breaks out to the upside because it hasn't taken out the left side? We're going to be discussing that. These are all very important. What about the volatility index at lows right now, historical lows in the 11 to 10% area? Well, what's the implication? Aha! What about the Index 100? You know that the Nasdaq 100 has gone to an all-time high, 48.16 back in March of 2000, and it just went higher than that. Isn't that incredible? Look at that U-shape. It makes an 82% correction. No. Cascade, waterfall cascade, a depression really, and then rallies to 826, three times up at 2239 October 2007, smash a 50% decline to November's low of 1018, and now it's at highs, all-time highs. That can't be bearish. I got this as a new leg B. It's not an F. It looks like a B in every way I count it. Isn't that unusual? So I'm going to be looking at so many things. The IBB, the Elliott wave. We still should get a leg 5 down in Elliott wave. Is it going to start now, or is there still enough residual strength? Talk about that tonight. Talk about the market vectors, the semiconductor index, a lot of things. I'm talking about social things that you'll never hear anybody talking about, not in this way, because I've been speaking about it for just ever so long. Hey, how about this chart here? Deutsche Bank, what is the implications for oil? Deutsche Bank comes out with a chart, a 2016 estimate that says the Saudi budget back in 2014, this is the budget, 279 billion, I guess. And then the actual expenditure was just a little more, 293. But wait a minute, 2015, 162 was the income, and the expenditure was almost double, 260 total. This is the total revenue, and then 260 are expenses. Oh, wait a minute, even less in 2016, 137 total revenue, and there's that estimate, and then the total expenditure, excuse me, is 224. What is the implication for oil? What is the implication for the Saudis? I'm going to be talking about that. Why? Because look at this. When you're looking at the oil-rich countries, Dubai has already built the world's tallest building called the Burj Khalifa. But wait a minute, that's not it. They're building a new one. It's called Dubai Tower. That's over 2,716 meters. It's a tad taller than Khalifa, and expected to be ready for the 2020 Dubai World Expo. These things have connotations. Remember, some time ago, I did a webinar. I spoke about the Chicago World's Fair back in when they just barely finished in time, 1892 was it? And they had from Boston who did all the gardens. It was just an incredible feat, and they especially designed the gardens in a special way. Olmsted was the designer. Just And if you look at the market, 1892, where's my map? Can I see it? 1892, I think it was 1893 that you saw a smash in the market, a really sharp decline in the Dow. All right, we'll be back. So things are coming to a head here. We've got the Dow down 47, S&P's down 7, still much weaker S&P 500 or weaker than the 30, and that's going to be important. Don't forget tonight's webinar. I'll be back and we'll wrap up in a moment, but I'll be back and talk a little bit more about this webinar. I think it's going to be a highly unusual webinar, well worth attending. I'll be back straight after these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Well, folks, we're back. So let me just do this here. I'm going to be looking at the implications of oil, of the areas like the XLE, the energy XLE. Let me just see, XLE trading up down 4 cents. A, B. It could go a little bit higher if the market's going to be able to go a little higher. But unless the XLE at 69.21 either breaks it's 69.23. If it breaks 60, right there, 68.12. If it closes under 68, that's a negative. In the weekly, certainly. But, interesting. If it's able to go to the 70.35 area in the next 5 days, that'll be really important. I'm not sure it can. I'm just saying that would impress me. So I'm going to be looking at all these different areas. XLV is at a spectacular move. and now it's made a peak D and potential F in the weekly chart. And the monthly chart is still very strong, but it looks like it needs a little bit of a consolidation. And that's the S&P Select Healthcare. I won't be spending all that much time on them, but I am going to explain what I'm looking at and why I'm looking at each one of these and what I expect from them. I'm also going to be talking about the socio-political. How did I put it here? I think I nailed it earlier on, and let me just find the slide that says it all. I'm going to be looking at, not there, not there, not there, not there. That's it. I think that's it. Yes. So within the context of the market itself, I'm going to try to extrapolate information that I've come across, and I'm going to try to explain about this in the period of excessivity that we're in. I'm talking about the relationship of the Wright brothers. Lindbergh comes along with his methodical way of doing every single thing and flying. He flew like no other pilot, and he survived. Other pilots did not survive. And then you get the experimenter, Earhart, and how that ties into the century changes. 20 years before a century, the 100 years is up, and then the 20 years after that. You go into it with a tremendous amount of excitement and experimentation, and then you come out of it with different areas of the tree. Instead of this huge trunk that's building with a couple of branches, all of a sudden you've got like solar with all these different forms of solar. You've got the internet with all the different forms, and you don't know for a long time which will become the medium that eventually becomes the multi-companies that become 5 companies, become 3 companies. Then you get your monopoly that has to get broken up. I'm going to be talking about it in that context, evolutionary context. I think it's very important. I'm going to talk about society's ever-repeating norms. I'm going to talk about the speed of usage, how consumption spreads faster today, how things are developed, and then whoosh, you get not hundreds of thousands or millions or tens of millions, but hundreds of millions. Now you've got billions of people on something like when you go to the Twitters and you go to the Facebooks. How does that happen, and what happens? How does it become the norm for the next period? These are all things that I consider right now to be really important. So before we wrap up, you're going to go to your swimming lesson, but let me make it real easy. The Dow is down 48. If, in fact, I'll do this with the VIX index. The VIX index maintains its slightly upward move of 12 at 12.39, up 58 cents. If by the end of the day the VIX is in the 12.60s, you'll see this market give it up. But if the VIX starts to fall and goes back to 12.10 or under 12, you'll see a sudden burst of energy. And I'm suspecting we're going to see a sudden burst of energy. I don't think we're done yet until the Fed makes this announcement. So we've got a day and a half of kind of whipping up and down and whipping up and down. Hey, folks, have a great day. I hope to see you tonight at my webinar. Don't forget, go to the front page of TFNN, check it in. And I'll also be talking about my newsletter in the webinar. Have a great day. I'll see you later.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.